So coming to the existing indirect structures in India, before the GST was introduced in India, indirect tax have been levied by the both central taxes and the state taxes. So here is the list of the taxes levied by the central government. First one, central excise duty, with the tax on the manufacturing of the goods. And the second thing, additional duties of the excise, which generally will be levied on the textile products. And third will be excise duty levied under the Medical and Toilet Preparation Act, tax on the medical tablets, manufacture of the medical tablets. And the fourth one, additional duties of the custom duty. So, countervailing duty CVD and special additional duty SAD. And the service tax. So, tax on the rendering of the services. And the any surcharge, central surcharge and the cesses. Coming to the state tax, we discussed about the list of the taxes under the state taxes. First one is the state VAT and sales tax. It is a tax on the sale of the goods. And the central tax, it is a tax on the inter-sale transaction. And the third thing is the purchase of the tax. It is a purchase of the goods from dealer by the buyer. And then entertainment tax, other than those levied by the local bodies. And the luxury tax. So luxury tax is usually on the tax of the luxury items. So example, tax on the 5-star hotels and the restaurant. And the entry tax. So generally the tax will be levied on the movement of the goods from the one state to another state on the specific products. Usually the specific goods includes the electronic products of the motor vehicles. And then tax on the lotteries and bettings and the gambling. And the any surcharge and cesses levied by the state government. On introduction of the GST, all the stated indirect taxes, either by the central taxes or the state taxes, have been subsumed, which means that all the indirect taxes have been unified to a single tax named GST. Hi friends, welcome to Insight Academy. In this session, we will discuss about the background of the GST. We all know that introduction of the GST is a very significant step in the field of indirect tax reforms in India. And also implementers of GST had a huge impact on the business, both large and small scale industry, and it changes the way of economy function. The learning objectives of this today's session is as follows. First topic, we will cover the brief history on the GST. And second point, we will discuss about the existing indirect structures in India. And third point, we will discuss the objects of the GST and also the features of the GST. And then we will cover the items which are not covered under the GST. And then all the relevant acts which are came into force in India on applicability of the GST. Finally, we will compare the GST in India versus other countries. The GST history. We have taken an important milestone in the way of implementing the GST in India. If you see the roadmap on the GST history, starting from the year 2004, a Kelkar committee recommended the national GST implementation in the year 2016. P. Chidambaram has introduced the GST in the budget speech, and also in the budget speech he proposed the target date to implement the GST. The target date was on 1st April 2010. And afterwards, an empowered committee of the state finance minister, shortly the EC, which had formulated previously The design of the state VAT was requested to come up with a roadmap and the structure for the GST. After multiple discussion, Empowered Committee releases the first discussion paper, FDP, on the GST in the November 2009. And then in the year of the 2015, Arun Jaitley, the ex-finance minister, re-proposed the GST, and he proposed the target date to implement the GST on the 1st April 2017. After this proposal in the 2016, GST got approval from the both houses in India. And in the year of the 2017, finally GST got live on the 1st July 2017. The last topic is very interesting. So we will discuss about the place of GST in India versus the other countries. Can anyone know about which is the first country that adopted the GST? The first country which adopted the GST was France in the year of 1954. Do you know? After the 16 years, in the year of 2017, India has adopted the GST. After the 1954, since then, there were 160 countries have been adopted the GST. Let me explain the interesting facts about Indian GST compared to the other countries. The first thing was highest tax slab rate. Do you believe or not? Among the countries in the world, India has the highest tax slab rate of 28%. The highest slab rate was 28%. 28% was the highest tax slab rate. Do you know in Canada, the tax slab rate was 5%. Malaysia was the lowest tax rate was 6%. And Nigeria also 15%. And even the New Zealand also 15% tax rate. And the second interesting point is highest threshold limit for applicability. Do you know in India, GST tax will apply if the annual turnover is more than 20 lakhs for the supply of services and the 40 lakhs. So 20 lakhs for supply of the services and the 40 lakhs for supply of the goods. This threshold limit, if you compare it with other countries, is the highest threshold limit for applicability of the GST. And the third interesting point was highest number of different GST rates globally. In India, the GST slab rate, excluding the zero rate, there are 4 slab rates. There are 4 slab rates. One is 5%, 12% slab rate, 18% slab rate, and then 28% slab rate. If you compare these 4 different slab rate, among in India versus the other countries, India the highest slab rate. There are the 4 countries apart from the India. There are the 4 countries. Apart from the India having the 4 slab rates. The first country, Italy, and second will be Luxembourg. Third is Pakistan. The fourth one is Ghana. Apart from the India, there are 4 countries which is having 4 slab rates. With this little background, of the GST, we have made a course on a practical knowledge on the registration of GST, filing of the periodic GST return, and also this course covers the theoretical explanation on the definition which are relevant to understand the GST registration and the GST return. To summarize, the course have been designed in two parts. The first part is a theoretical explanation, and the second part is a practical explanation, which includes the live filing of the registration and returns. First part will be discussed by myself. So my name is C.S. Santosh Kumar, and the latter part will be taken up by Mr. C.S. Sudhakar. And this course will be useful and intent for an CA student and the finance aspirants who are required to apply theoretical knowledge on a daily basis in practically. Thanks for watching this video. We will again meet you in the course. Because the items not covered under the GST. The first item was an alcoholic liquor for common consumption. Article 366 survey of the Constitution of India provided that alcohol liquor for common consumption is an outside the purview of the GST. And the second thing, it is a petroleum products. So petroleum products contains 5 products. One is like a crude oil, crude petroleum. Second is a diesel, and third is the petrol. Fourth one is a natural gas, and the fifth one is an aviation turbine fuel, which are used in the flights. Central Excise Act still holds but continues to apply for these petroleum products. So GST will not apply these petroleum products. And the third point is an electricity. Taxes on the consumption and the sale of electricity was in the ambit of the state only. On implementation of the GST, there are relevant tax which are came into the effect. The first one, it is an Central Goods and Service Act 2017. And the second one is Integrated Goods and Service Tax Act 2017, shortly as an IGST. And third one is an Union Territory Goods and Service Tax Act 2017, UTGST. And the fourth one, the Goods and Service Tax Compensation to the States Acts 2017, compensations. These 4 acts are came into the effect from the 1st July 2017 in India. Coming to the objects of the GST. The first object is in a common national market. That previously each state has its own act and the taxes are levied accordingly. Now, after implementation of the GST, now the single GST applies to all over the India, which removes the barrier among the states. And the second major object of the GST was avoid a cascading effect of the taxes. I will explain about what is meant by the cascading effect. The effect of levy tax on the tax is called a cascading effect. It is a double taxation. So it is like a tax will be levied on the same product. Again, the tax will be levied on the tax of that product. On implementation of the GST, it avoids the cascading effect of the and next features of the GST. The first feature of the GST is consumption-based tax based on the VAT principle. Consumption-based tax means tax will be payable in the state in which the goods or services are both are finally consumed. Take an example. Exports are not taxable because the place of consumption was outside India. Similarly, imports are the taxable because the place of consumption is in India. And the VAT principle, we all know that in the VAT, it has a system of allowing the input tax credit of the tax paid on the input services, capital goods, output supply. It's the same concept that holds good for the GST. So that is a VAT principle. So even like similar to the VAT, we can also take in the GST also. In the GST tax also, it allows to take an input tax credit on the purchases weight. And the second feature is a concurrent dual GST. India has adopted the concurrent dual GST model. In this model, the dual levy imposed concurrently by both the state and the central, but independently. It means that both the central and state government will operate under the same base, but levy on independently. These are the two major features of the GST. Hi friends, today we are going to discuss about the GST registration. So basically in this video we will cover the basic concept of the GST, and after the completion of the video you will able to do your own self in the GST portal for the registration. So this video is not meant for like explaining in a GST Act in depth, but definitely we will cover up the basic details of the GST Act where you can able to take the registration by own in the GST portal. So coming to the GST registration, so the first state we will cover about what are the areas that we are going to cover in this session. The first one we will cover about the nature of registration. At the second point we will define a taxable person in detail. And the third part that we are going to cover it is who are the person liable to take registration under the GST Act. And the fourth point we will cover the aggregate turnover. And the fifth point we will discuss about the who are the persons who require to take a compulsory registration. And the last point, it is like the person who was not liable to for registration. So coming to the nature of registration, the first basic point for the GST registration, the GST registration is meant for like it's in a PAN based and also in a state specific. And also the one key point, it is like one registration per state and the union territory. Since I told it is in a state specific and also on a PAN basis, so each PAN will have a separate GST number, and also the state will have a separate GST, so that the business entity having in a separate places of business in a state may obtain a separate registration for each of the place of the business. Let's say there is an X company was operating in an AP which is having a GST. Suppose this the same company want to start a business in the other part of the India. Let's say they want to start the business in the Telangana, they should take in a separate GST number because the GST is in a state specific. At each registration, they will allot in a GST number. GST number is a GST identification number which typically contains a 3-digit number. So we know that all like a PAN is a 10-digit number, and even for the for the company, if the company got registered, they will allot in a SIN, company identification number. In the similar fashion, like if you register the GST, they will allow in a GST IN, so which is then a 15-digit number. I will just elaborate the 15-digit number. The first two digits it is in a state specific. Let's say if we take it in an AP, it can be 3 or if it in a, like in a Telangana, it can be in a 4 it is in a state specific code. And the next digit will be in a PAN of the registered person. Suppose I am applying in the GST registration, so that my PAN will be in this 10 digits. And the next, it is like the number of business that the entity is having. Suppose like I have already taken a registration in the AP, and now I'm going to apply the registration for Telangana. So my GST number will be, the digit will be 2. It is my second time I'm applying with the same PAN number with a different state. At the 14th digit will be an Z, always will be an Z. At the 15th will be it is like an as total. Based on the 14th digit, it will calculate an as total, and it will even call it as an balancing figure of all the 15 digits number. And the last one, the certificate of registration available to the applicant on the common portal. Let's say, see, every registration process will be done in the GST portal. We will apply, we will fill the form, and we will provide the documents for the registration. once the GST registration got approved, they will provide us a certificate of the registration that can be valid. Okay. Thank you, friends. Hi friends. Today we are going to discuss about the basic concept of the GST for filing of the GST returns. This session we will cover the GST returns in theoretically and practically. Moving to the agenda of the today's topics. The first item we will discuss about the what is a GST return, and the second thing we will cover the who should file the GST returns, and third thing what are the types of the GST returns, and the fourth thing due dates for filing of the GST returns, and the last thing we will cover on the late fees and penalties. Moving to the GST return. The first topic we will cover the what is a GST return. So we all know that a registered taxpayer has to file the GST return to the tax authorities. And GST return is the base document for the tax authority to check whether we have paid the tax appropriately or not. So obviously the GST returns contains the sales, purchase, income and expenses. So GST return is a document containing the details of the all income, sales and our expenses or purchases of a taxpayer based on the GST. So it broadly includes charges, and second thing it is an sales, and third it will be an output GST on the sales, and fourth will be an input tax credit GST paid on the purchases. History. Who should file the GST returns? Everybody having who should file the GST returns? Every taxable person registered under the GST Act has to file for each registration separately. If you observed, it states that one person can have a multiple GST registration. So I have a doubt. Everybody having a doubt. Can one person have a multiple GST registration? Answer it yes. See, because like GST registration is an pan specific and the state specific. Okay. If you have a single person having a business in the one state and also you want to operate in another state, you should take another GST number. So that is why even the single person can have a multiple GST registration, and he need to pay he need to file the GST returns, like multiple GST returns. For each of entity has to file a GST return separately. That is why every taxable person registered under the GST Act law has to file for each registration separately. Number of GST returns to be filed will be based on the category of the taxpayer. Okay. The category, there are the different categories. That the first will be the regular tax payers. They will file the GST R1 and the GST 3B. In this session, we will cover the elaborately about the GST R1 and also the GST 3B. And next thing, composite dealer, they need to file the CMP 08 on a monthly basis and the GST R4 on an annual basis. And next will be non-resident taxpayer. They have to file the GST R5 on the monthly basis. And the next one is an input service distributor. Generally we will call it an IST. They have to file an GST R6 on a monthly basis. And the fourth will be TDS deductor, who has to file then a GST R7 on a monthly basis. Generally government authorities will file the GST R7. And the e-commerce operator, they have to file a GST R8 on a monthly basis. We have explained that theoretically GST 3P, GST 1 and GST 2 and GST 9. We will take up an example and we will discuss the what will be committed to the GSTR 3B and what we need to disclose in the GSTR 1 and what will be auto-populated which is coming to in the GSTR 2A. So take an example, and a trading account is a detailed trading account I have made it is not the summarized trading account is a detailed trading account to understand better for our discussion. Taken it is a company called an XYZ company. Normally we'll have in the sales. Then it is in a purchase. We're having in a purchases. You assume that there is no stock and all, so it is a simple thing: sales, purchases, and we will end up with a cross profit cross loss. So if you take an example of the trading account of the XYZ company, we have mentioned as sales. So these are the invoices, list of the invoices under the sales. It contains the taxable value, tax amount. It's an 18%. If there's a 18% tax rate, so tax amount will be 18% into the taxable value, and you will have an invoice value. It's the sum of the taxable value and the tax amount. Okay, this is in the total of the we made you take in a month of April 20. This month of April 20. So we made 8 sale invoices in that particular period. So total amounts to 33,310, and the tax amount is amounts to 5,986. And similarly, so correspond to the sales. Definitely, it take an example of it. It is in a trading. It is in a purchasing. It is in a trading business. You obviously will purchase, and then you made a net sales because there is no stock, because there is no raw material, no consumption. It is just a purchasing entity. It is the purchasing business where they will purchase the items and then they will sell it to other persons. So you see that purchases. It is the list of the purchasing invoices. 6 purchasing invoices they have made, which contains the having a taxable value for each purchase invoices, and also the tax amount, the same with 18%, and also the invoice value that we have made. So this is my total sales made for the particular period, and the total purchases made in that period, and this is the gross profit. With this an example, we will explain the what under to be disclosed in the GST 3, GST 3B, GST 1, and also the how it auto-populated, how it will be auto-populated in the GST 2A. I told the GSTR 1 as we discussed it. First we discussed GSTR 1, 3B, and then we discussed the GSTR 2A. In the GSTR 1, it is a list of. You have to discuss the list of invoices of outward goods and supplies. You see, these are the outward goods and outward supply of the goods and services. So we have to disclose at the GSTR 1, which was highlighted in the orange colored. So these are all taxable value, tax amount, invoice value we have to disclose in the GSTR 1. It can be at code weights, state weights. It can be in a different category. But it is like the finally we have to disclose invoice with it is that detailed. I told the GSTR 3P there are summary, GSTR 1 was a detailed one. There we have to disclose the invoice wise, what is my taxable value, what is my tax amount, what is my invoice value. And coming to the GST 3P, it is a summary where you will contain, I told, what is my taxable value. If you see I was highlighting in the yellow color, we will disclose the total amount. We will not discuss individual amount. We will discuss the consolidated amount. What is my taxable value, what is my tax amount. So as I told, like, we will elaborately discuss about the GSTR1 and the 3P. So coming to the GSTR1, so what is the GSTR1? Definition is as follows. See, GSTR1 is a return to be furnished. GST return is a return to be furnished for reporting details of all outward supplies of the goods and services made, and also for reporting the debit and credit note issued, any amendment to the sale invoices made even pertaining to the previous tax periods. So GSTR1 is typically an return where we will report the first accept it is all outward supplies of the goods and services made, and the second we will cover the reporting the debit and credit note issued, and third will be any amendment to the sales invoices. So GSTR1 is typically contains an outward all items related to the outward supplies, where like original invoices or any debit or credit note issued related to the original invoices, or any amendment to made to the sale invoices. Okay. The next will be, who should file the GSTR1? Who should file the GSTR1? Every person who is registered under the GST is required to file a GSTR1. But there are certain exceptions that we already know. The first will be an input service distributor, because the input service distributor has to file in a GST6 on a monthly basis, so they will not file in a GSTR1. And the suppliers of the online information and database access or retrieval of the services who have to pay the tax themselves, they need not required to file GSTR1. And third will be a composite dealers. The composite dealers are going to file CP08 on a monthly and the GSTR4 on an annual basis. That is why they want other funds to file. They are given an exemption to not to file in the GSTR1. And the non-residential tax person, non-resident taxable person has to file in GSTR5 on a monthly basis. And the last item will be a taxpayer liable to collect the TCS and also a TDS. They are on a different forms to file. That is, they are not required to file in the GST1. So every person who is registered under the GST has to file except a few of items. These exceptions given because they have an other alternative forms to, instead of GST, they will file in other forms. Okay. The next study. Due date for the filing of the GSTR1. So one should very keen to understand the due date for the filing of the GSTR1 is very important thing, because if you not file within the due date, you will end up with a late fee and the penalties, and also the late fee and the penalties. So you take a turnover. Okay. The turnover of the previous year of an registered taxable person, if it's less than the 1.5 crores, if it's less than the 1.5 crores, if it's the net, then he has to file on the quarterly basis, and the due date will be on 13th of the next month of the following the quarter. Take an example of the Q1 of the financial year 2021. We start from the 1st April 2021 to the ended with the 30th June 2021. So have to file on the 13th of the July of the 2021. And if it's in a turnover, if it's more than 1.5 crores, he has to file it on the monthly basis. The due date will be in the 11th of the next month. You take an example of an April 2021, he has to file on the 11th of the May 2021. And there is a one important, the turnover which is less than the 1.5 crores. Okay, it is an optional given to a taxpayer. He can opt for a quarterly or he can opt for a monthly. If it's okay to file it on a monthly, he can very much go on the monthly basis. He need not do on a quarterly basis. But turnover is more than 1.5 crores. It has to be mandatory. He has to file on a monthly basis. So whatever the turnover, which is less than 1.5 crores, it is an option given to the taxpayer. He can opt for a quarterly or monthly basis. But turnover is more than 1.5 crores, has to file on a monthly basis. So what will be the late fees and penalties if you not filed on a GST or return within the due date? For the normal returns, it is 50 rupees per day of the default. If it is a nil return, there is no sales made. That is a nil return. There is no outward supply of the services, goods and services. Has to pay 20 rupees per day of the default. So we're computing the late fee and penalties. Whether we need to see whether it's a nil return or not. If it's a nil return, the penalty, the late fee and penalty is reduced to the 20 rupees per day. And if it's having an outward supply of the goods and services, if he's having a turnover when he is filing the return, he has to pay like 50 rupees per day of the default. And the next thing, how to revise the GSTR1? Like when you come across to the income tax return, we will file the personal return, and if you find that any changes that you want to do, there is an option called within the prescribed time, we can go and we can revise over the personal return. So there is an option was available in the income tax return. Everybody having a doubt, if I made a mistake in the any GSTR1, whether I can an option to revise the personal return. But unfortunately, there is no option. The return once filed cannot be revised. There is no concept of the revised return in the GST. So now everybody having a doubt how to correct the mistakes was made in the earlier periods of the GSTR1. The possible way for doing any correction for the mistakes made in the earlier month is in one way. We can't go back to the original return. Take an example. If you're filing for a month of April 20, you made any mistakes, and the month of May, you have realized that the mistake has done. So on the April, on the May, we can't go to the original return which was filed in the April 21. So obviously, what we need to do, whatever the mistakes that was made, the impact of the mistake, you can very much given the May month when you're filing in a GSTR1, and then you can file the GSTR1 for the May month accordingly. You take an example, let's say you made in a sales of the 100 lakhs. You made in a sales of 100 lakhs in the April month then. But you now make it is when you're filing in a GSTR1, you made it is you undisclosed the 90 lakhs, you undisclosed the 10 lakhs, and you are put it to the GSTR1 as 90 lakhs, you undisclosed the 10 lakhs. So you have reported to the GSTR1 as 90 lakhs, but your actual figure it is 100 lakhs, okay. There is a shortage of the 10 lakhs that you have missed. Maybe like your accountant maybe not properly when he is reviewing. So he mistakenly mentioned it's a 90 crores, and then you have filed the GSTR1, and later when the management has reviewing it and in the month of the May, they have noticed that the April month the sales, whatever outward sales it is 100 crores is there 100 lakhs out 90 lakhs. So the 10 lakhs, whatever the deficit which was arising in the April month needs to take in consideration in the May month when you are filing. Suppose the May month, if the sales were 150 lakhs, so what you do when you're reporting in the May month, so we will report as a May month 150 lakhs and also the 10 lakhs that you missed out in the April month. So total turnover you report in the May month it is 160 lakhs. So this is only the option. So we can correct the mistakes made in the April month. previous earlier periods. Discuss about the GST 3B. What is the GST 3B? The 3B is a monthly self-declaration to be filed for furnishing the summarized details of all outward supplies made, input tax credit claim, tax liability asset type, and the taxes paid. This is what we will, it is in a summarized return where we will tell what is my all outward supplies made, and also what is the input tax credit claimed. So normally tax on the outward supplies less input tax credit will give me the tax liability. Tax liability is at 10, and if you pay a tax, will then taxes paid. It is in a simple form where you will tell what is my outward tax and what is my input tax credited, and the balance will be in my tax liability, and from the tax liability how much tax we got paid. This is a simple form. A separate GST 3B must be filed for every GST item. I told you, so one person can have a multiple GST registration. So like we are discussed in filing of GST 1, every person for each registration they have to file the GST 1 separately. In similar manner, each registration, even for the same person, for each registration, the person is required to file GST 3B for each of their registration. GST liability must be paid on or before the date of filing the GST 3B earlier of its due dates. So, to the GST 3B, we will ascertain the tax liability. So, whatever the tax liability we have ascertained in the GST, we have to pay it. Then only we have to pay it. We have to set off. So then only it will. Once you pay that tax, we can able to file the GST 3B. Right. Well, what there is not sending things. Yeah, great. Even in case of the zero liability, a GST 3B must be compulsory paid. This is very important. Most of people will register will get a registration from the GST, and they will leave for from the registration and for doing for the commencement of there is a certain cap will be there. Usually people will not fight the GST registration. They thought I don't get any awkward supply of the sales. That is why I'm not going to I'm not required to file the GST 3B. Not like that. Even if you cannot, once you register, you are bound to file. Once you register, it is obligatory to fight the GST 3B test particularly. You can't avoid because of that you are having an annual return. That we already discussed even for the GST 1 also. If you're having an annual return, the late fee will be levied as a 20 rupees per day of the default. So in order to avoid this late fee, we have to file even if it's a zero liability, also you have to file the GST 3B within the due date. And next will be who should file the GST 3B. It's important thing. Every person with a register under the GST is required to file the GST 3B. Every person with a register under the GST, it was similar to in the GST 1. So every person with register under the GST is required to file the GST table. There are certain exceptions was there because there were other alternate forms. The same thing that we are discussing in the GST 1. One will be the input sales distributor and the supplier of the online information and database access and retrieval services. How to pay the tax themselves. And next will be composition dealers. Composition dealers has to file the CMP 08 on a monthly basis to satisfy. They are not required to file a GST 3B. As a non-residential taxable person, they have to file the GST 5 on a monthly basis. So next will be the due date for the filing of the GST 3B. Taken a turnover of the taxable person, it is a previous year turnover, which is less than the 5 crores, with a less than the 5 crores, okay? If it is less than the 5 crores, first we will discuss about if it is more than the 5 crores. It's a no, that means like it is more than the 5 crores. They have to file on the 20th. They have to file on the 20th of the following month. Okay, and if it less than the 5 crores, there is an option for quarterly return and monthly payment. This scheme was recently introduced. If they opted for the taxable person has opted for the quarterly return and the monthly payment, if then opted, then there is a relaxation given 22nd or 24th. I will explain that what are the states has to file the 22nd and 24th. And if it is no, if they are not opted for, if it is less than 1.54, and if it's not opted for the quarterly URFP scheme, then they are required to file the GST 3B before the 20th of the, or not before the 20th of the following month. We take an example of an EA whose turnover is less than the, let's say taken turnover to 3.5 crores, okay. Turnover is 3.5 crores and he is not opted for any quarterly return and the monthly payment. He has to file the tax, has to pay GST 3B for the month of April 2021 in on or before 20th of the May 2021. Suppose the turnover is less than 5 crores, okay, and he opted for the quarterly return and the monthly payment scheme, there is a relaxation given. He can, the due date will be extended to the 22nd of the following month or 24th of the following month. See, there are then a certain stage, you have a doubt that the way there is a two dates was given 22nd and 24th. There are a certain state, mostly like in northeastern states, and also the Odisha and some Uttar Pradesh. There are certain states which clearly given. It is they have given another 2 days relaxation from the other states. Like they feel like they felt like these states are small and there is we can given, and the government felt like that we can given it. They can give a relaxation for another 2 days compared to the other states. Okay, so they have given it to the due date for the specified states will be on 24th. Apart from the those specified states and the remaining states will be on 22nd. Again, I'm repeating. If the turnover is less than 5 crores, which is no, they have to file on the 20th of the following quarter. If the turnover is less than the 5 crores, and also if they opted, and also if they're not opted for the quarterly return and monthly payment scheme, they have to file the GST 3B on or before of the 20th of the following month. And also, if the turnover is less than the 5 crores and they opted for the quarterly return and monthly payment, they have to file, and we need to see that what state they have the registration. If the state was related to the northeastern state and also the some special category states, they need that they can file on the due date will be on 24th of the following month. If other than states specified, so then remaining all other states they can file on the taxable person who is registered in that state can they file on the 22nd. The due date for them is on the 22nd of the following. So like this. The same thing, due date for filing of the whatever we are discussing, the tax payable, which is the turnover is more than 5 crores. We are already told file the monthly in the 20th of the next month. And the tax payable up to 5 crores, we told there are 2 schemes were there. The one scheme, like if they are not after the quarterly return and the monthly payment, they can file. They should file it on or before the 20th. If they opted for the quarterly return of monthly, it is on the 22nd of the next month for the certain state. And if it belongs to the northeastern states and also some specific states, and 24th of the next month. If we see that Himachal Pradesh, Punjab, Uttarakhand, Haryana, Rajasthan, UP, and these will be, Sikkim, Arunachal, Nagaland, Manipur. These are the northeastern states, and also the Odisha, and also Union Territory of Jammu and Kashmir, and Union Territory of Ladakh. There are certain states specifically provided by the government. So we have to file on the due date will be 24th of the next. And the last part for the GST 3B, what is the late fees and the penalty? The same way, whatever we are discussing the GST 1, I'm just again same applies to the GST 3B also. 50 rupees per day for the normal letters, 20 rupees per day for the nil letters. See, the nil return, if it is a nil return, that is 30 rupees per day. If it is not a nil return, that means that you made the taxable person made an outward of the certain outward of the goods and supply of goods and services, then it has to, then the default penalty will be the 50 rupees per day. And coming to the interest, there will be no interest levied in the GST because it's not related to any payment. It is this form, this is an return where we will disclose the outward of the supply of the goods and this. But the GST 3B is related to a payment. Before the filing of the GST, we should pay the amount. So the interest will be levied. Tax paid after the due date, 18% per annum will be charged. Tax paid if it is the 20th the due date, and if it is the 20th is the due date, if we paid at the 22nd, the 2 days that interest will be charged at the rate of 18% per annum. And there is one more bracket where like IT the input tax, excess input tax was available in the uttered, but you have claimed it as 20 rupees. The excess you claim it. The excess ITC claim that excess reduction in output tax has to pay 24% per annum. So the two interest rates applies to the GST 3B. One will be an 80% per annum, that is for the tax paid after the due date, and the second will be a 24% per annum, that will be excess ITC claimed or excess reduction in the output tax. And the same question for the GST 1, can we revise the GST 3B? I already told the GST 1 there is a whole concept of the revision of the external return, which is similar was there in the income tax, was not there in the GST Act at all. That is called, so a return once filed cannot be revised. If you need to file anything in the particular one, you have to, whenever you observe on that, you have to disclose and you have to pay with an interest. So next we will, the thing is like a GST 2A. What is the GST 2A? GST 2A is a purchase related tax return that is automatically generated from each business by the GST portal. So in the GST 1, we are reporting the outward supply of the goods and services. In the GST 2A, it is an inward goods and supply of the goods and services. Inward. So GST 2A, if you If you look into the definition, it is an automatic generation. So no taxable person requires to file in a GST where it is an automatic population. Why? Because that is a basic concept. If you made if A makes an sales to a B, if Mr. A makes an sales to an Mr. B, sales to A is equals to an purchases to Mr. B. So one person sales will be, another person purchases. So every taxable payer will report to an sales made to another parties. So in other parties, it is obviously it is a purchase of another parties. So GST 2A will automatically populate it for each business. We need not worry about the filing of the GST 2A. It is an automatic every tax payable at the response file GST 1 on the funds file the GST 1. So GST 2A will be automatically populated to the other person. The sender files the GST 1. The information captured in the GST 2A, it takes an information of the goods and services which have been purchased in a given month for the seller's GST 1. As I told you discussion, the one person sale is and purchases to another person. You are required to verify this return before filing it on the GST portal. When you're filing in a GST, taking a GST 3P or something, we will mention what is my input to tax that I am taking. But before you mentioning the GST or before you mention the input tax, we can look onto the GST 2A of that one, and if you observe any differences, we need to act accordingly. GST 2A will be auto-populated from the following returns of the sellers. I told it's an auto-populated. I will tell you what are the from which returns the seller files. It will be auto-populated. GST 1. The regular tax payable person will require to file in a GST 1. If you file in a GST 1, so GST 2A, this is an input for a GST 2A. And the GST 5 for the non-residents, if they buy the GST 5, we get a GST 2A. And also similarly, the input service distributor, they have to file a GST 6 on a monthly basis. And also the person liable to direct the TDS, usually the government agencies, they will file a GST 7 on a monthly basis. And the GST 8 for an e-commerce. All the output, these are all the outward supplies. Every person depends on a different category of the person. They have different forms to file. Okay, all the outward supplies, the goods and services will be an import to other parties. The import will be summarized in the GST. Will return GST 9. So what is then a GST 9? See, GST 9 is an annual return to be filed yearly by the taxpayers registered under the GST. The GST 1, whether it's not monthly or quarterly, they have to file. It is like a consolidation of all the GST 1. The simple thing. It consists of the details regarding the outward and inward supplies made or received during the relevant financial year under the different tax rates: CGST, SGST, IGST, and HSN post. All outward and inward supplies made received during the relevant financial year under the different tax rate. So we will disclose the GST separately, SGST separately, IGST separately, and also based on the HSN 4/3 separately. See, it is I told already, it is a consolidation of all the monthly quarterly rate of GST 1, GST 2B, GST 3B in the file that year. So all the consolidation, the regular tax payable will file on the monthly or quarterly for GST 1, monthly GST 3B, and the GS2A is an auto-populated form. All the consolidation, all the details is mentioned in that code here. We will consolidate and we will file a form called a GSTR 9. Who should file the GSTR 9? All the tax with the same thing. All the taxpayers, taxable person registered as GSTR must file a GSTR 9. However, there are a certain exception given because they have an alternative forms for filing of the GSTR 9. Then first one will be the taxpayers opting for the composition scheme. They will file the GSTR 9, and the casual taxable person, they will take an registration for a temporary period for one project. They will pay, and that they will that person will pay. They will get registered for the temporary period, and they will pay that. They will file the returns for a temporary period for each set for 3 months, and then they will cancel the registration. So those casual tax person not required to file in a GST, not required to file in a GST. And next one will be the input service distribution. Need not file the GST 9, and the not resident taxable person also not required to file in the GST 9. That's the last thing. Person paying in a TDS under the Section 51 of the GST Act with the government authorities are also not required to file in GST 9. So GST 9, everybody, all taxable person, all taxpayers or taxable person registered under GST must file the GST 9, except that these following category of the tax person. In the same category that who should file the GST 9. GST 9, okay, filing for the business with a turnover up to 2 crores. Turnover up to 2 crores made an optional. Made an option. It is not. It's made an option for a financial year 17-18, 18-19, and also the 19-20. It's the first time GST 9 it is an complicated form where it will provide elaborate details which contains in GST 1, 2A, GST 3B. The government felt that for the smaller organization where it would be difficult to file the GST 9, they given a relaxation up to a turnover for the crores. For an they came and made an option for the financial 17-18 and 18-18 and the 19-20. So whenever it is not like up to turnover for the 2 crores for all the periods. They specifically provided for these 3 years. Maybe like in the next financial year they may give or they may not give an optional. If they not made any optional, every taxable person has to file the, even if it's less than return 2 crores also turnover less than 2 crores also they're required to file the GST 9. So due date for the filing of the GST 9. So the due date is it is a due date in the 31st December of the year following the particular financial year. 31st December of the year following the particular financial year. You take an example, financial year 1920, which was ended on the 31st March 2021. They have to file 31st on or before the 31st December 21. The due date for the GST 9 for the financial year 1920, as for the first statement, it has to be filed before the 31st December 20, but they were extended up to 31st March 21. And as all we know, this GST Act was an new thing to all of us. So government really felt that the process, whatever the process involved is a typical process involved for filing the GST 9. So they are giving a relaxation. So they given an 3 months relaxation. The 31st March 2021. It may extend or it may not be extended. That depends upon the government's call taken on the GST 9. And the late fees and the penalties. So late fee, the penalty, it is 20 rupees per day of the default. GST 100 rupees. We have to pay like this 200 rupees per day of the default. It consists of the 100 rupees portion of an CGST, 100 rupees portion of an SGST. But they made a cap for penalty that is 0.25%, 0.25% of the taxpayer's turnover, subject to the maximum of the 0.25% of the taxpayer. So the penalty will be 200 per day, but it will not more than the 0.25% of the taxpayer's turnover. So GST has been late fee and the penalty.
Now we will discuss how to file GST ROA. Go to services.gst.government.in. Enter the username, password and image as shown below. Click on Return Dashboard. Select the period for which you are going to file GST as it 1. Select and select the period for which you are going to file GST as 1 return. Click on Search. It will show the returns filed or to be filed for that period. This is the GST 1 return. As name suggests, in GST 1 we will file outward supplies of goods or services. Click on GST 1. Where you can fill the details of outward supplies. First one is B2B invoices. Click on B2B invoices. Then click on Add Details. Select the deemed exports or SEZ supplies with payment or SEZ supplies without payment or supply attract reverse charge if it is applicable. Enter the receiver GST number here. Then receiver's name, place of supply and supply type will auto-populate. Then enter invoice number and invoice date. And total invoice value here.
People read that. We not any bad. I'll treat them all.
Based on supply type, CGST and SGST or IGST will appear automatically. Enter taxable value. Click on Save.
Is that half an hour later? That
Once clicking the Save, you will be redirected to a page where you can edit or delete the invoices. If you want to add more invoices, then click on Add Details. Otherwise, you can click on Back. For filling B2C large invoices, click on 5A table. Here we will fill B2C invoices more than 2.5 lakhs. Then click on Add Details. Select the place of supply. Enter the invoice number, invoice date, and invoice value. And enter taxable value. And click on Save button. After clicking Save button, you will be redirected to a page where you can add or delete that invoices. If any other invoice are there, then you click on Add Details, or you can click on Back button. As name suggests, here we will enter details of credit or debit notes issued to registered taxpayer. Click on Add Details. Select the deemed export, SEZ supplies with payment, SEZ supplies without payment, supply attract reverse charge if applicable. Enter receiver's GST number. After that, receiver name, place of supply, supply type will auto-populate. Then enter credit or debit note number. And enter debit or credit note date. Select the type of note, either that is debit or credit. Enter note value. Then enter taxable value. And click on Save. If any other credit or debit notes details you require to enter, click on Add Details or click on Back. If it is required to change details or if it is required to delete, you can delete or change here. Then click on Back. Here, details of credit or debit notes for unregistered user to be filled. Click on Add Details. Select the type of supplies from the drop down button. And enter the debit note details, such as note number, note date, note value, type of note, that is credit or debit, and place of supply. And enter the taxable value here. After entering these details, click on Save. Once entering this file area, if you extend it, filling debit or credit note details, it will appear here. Click on Back button. Here we will fill export invoice detail. Click on add details. Enter the invoice number, invoice date, and port code, and shipping bill number, and shipping bill date, invoice value, type of GST, GST payment type, whether it is with payment of tax or without payment of tax, and a tax bill value. Once after filling this details, click on Save. After filling this details, it will display the invoices which you are entered here. Then click on Back. Invoices need to enter here. Select the finance layer from the drop-down button for which invoices pertains to, and enter the invoice number. After entering these details, click on Amend Invoice. In type, amended B2B invoice to be filled. In type A, here amend B2C lot invoice details to be filled. Here amend export invoice details to be filled. Here amendment to credit or debit notes issued to register persons to be filled. In 9C, amended credit or debit notes issued to unregistered persons to be filled. Invoices details to be filled. Click on Add Details. Select the state from the drop-down button and enter the taxable value. And select the rate from the drop-down button. Select the rate from the drop-down button. Based on taxable value, CGST, LGST, or IGST will be calculated automatically. Then click on Save. If it is required to edit or delete, then you can go here. Otherwise, you can click on Back button. Then it will be redirected to home page.
I have not had.
Enter the outward supplies. Enter here nil rate exempted and non-GST outward supplies. In 11A, enter tax liability. In 11A1, A2, enter in 11A, If any advance received, if any tax liability is there on advances received, is to be entered here. And any advances paid, any tax liability paid and advances received previously to be entered here. HSN-wise summary of outward supplies to be entered here. And in table 313, number of documents issued and cancelled and total net issued, those details to be entered here. And any amended tax liability there on advance received is to be entered here. In 11B, any amendment of advances. After filling all these details, click on Generate GSTR1 Summary. It will generate the summary of details. It will generate the summary of details which we have filled till now. It will take 1 minute. After 1 minute, click on refresh button. Then click on preview. It will show the draft return which we have filled till now. Declaration and click on submit. After clicking submit, it will display the warning as well. Click on proceed. Then it will take some time to submit that form. Then click on file return. Then return can be filed through then click on file return. After clicking file return, you will be redirected to returns filing page. And it will take some generate this submitted return. Then you can file either through DSC or EVC. EVC is OTP password. Click on declaration and select the authorized signatory from drop down. And click on file with EVC. After clicking EVC, OTP will send to the registered mobile ID and mail. Then enter the OTP. Click on verify. Then it will show the message that is return has been filed successfully. That's it. Thank you. Go to gst.gov.in. Click on login on the top corner, right side top corner. enter login credential, that is username and password. And enter captcha. Then click on login. Then click on return dashboard. Then select the period for which you are going to file GST 3B. Now I am filing March month. Click on search. Here 5 tables are there. First one GSTR 1. Second one GSTR 2A. Third one GSTR 2B on monthly basis. Fourth one GSTR 2B on quarterly basis. Last one GSTR 3B. Click on GSTR 3B. Here one message will appear, that is, do you want to file nil return? As discussed earlier, even though we don't have any tax liability, then we should file at the time nil return. But here we are not filing nil returns, we are filing normal returns. So I click no, then click next. Then it will show one message, that is whether GSTR 1 is filed or not. If GSTR 1 is filed, then it will show status as filed. Then GSTR 2B, liver charge, then RCM related to input services, then RCM related to input services appear in GSTR 2B is generated or not. Then ITC is generated or not in GSTR 2B. The status will show here. Then click close. In GSTR 3B, there are 5 tables are there. First one relating to supplies. First one relating to outward supplies and RTM and inward supplies. Second one relating to interstate supplies, that is outside state supplies. Third table, eligible ITC details. Fourth table, inward supplies of exempted nil and non-GST inward supplies. Fifth one, if there any interest and late fees there, then we need to fill in last table. We will see one by one. First table, supplies relating to our first one. For 3.1 table, outward supplies and RCM and inward supplies. Click on it. Here the data from GSTR 1 will auto-populate here in this table. Here 5 rows are there. First one, outward taxable supplies other than 0 rated, nil rated and exempted. Here we need to fill. Here it will auto-populate, the details auto-populated from GSTR 1. If the details are not correct, then you can change accordingly. Here we need to fill taxable value, IGST, TGST, SGST and cess. Likewise, second one related to outward taxable supplies which are 0 rated. For the taxable value and IGST only will come and cess. Third one, outward supplies which are nil rated and exempted. Since here nil rated exempted, then there will be no GST. you may have doubt that in B also zero rated is there. Even though here zero rated is there, sometimes these are SEZ supplies. Sometimes the supplies we may pay through GST, then we can claim as refund. In that case, we will enter here. IGST portion we will enter here. Fourth one, inward supplies liable to RGM. These are supplies what we have received but need to pay through RGM basis. For that, we need to enter taxable value, IGST, CGST, SGST, and cess. Finally, last one, non-GST outward supplies. Those details need to fill here. Then, after entering all these details, then click on confirm. Next step is 3.2 interstate supplies. These are the outward supplies we have made to outside the state supplies to unregistered persons and composition taxable persons and UAL holders. First one, supplies made to unregistered persons. Here we need to give state-wise summary of details outward supplies made to unregistered persons. Then second one, supplies made to composition taxable persons. There. Last one, supplies made to UAL holders. After filling all these details, click on confirm. Next table 4, eligible ITC. Click on eligible ITC. Here we will fill ITC details relating to further period. These details are auto drafted from GST 2A. First one, ITC available on import of goods, on import of services, on inward supplies liable to RGM other than 1 and 2. This inward supplies liable to RGM, whatever we have paid through out, paid an RGM. In ITC table, there are 3 parts are there. First one, ITC available. Second one, ITC reverse. Third one, net ITC available. Fourth one, ineligible ITC details. First one, ITC available. In ITC available part, we will fill the details of ITC whatever we have considered in that period. In these ITC available, there are 5 separate parts are there. First one, ITC available on import of goods. Second one, ITC available on import of services. Third one, inward supplies liable to reverse charge. These inward supplies liable to reverse charge is the amount what we have paid in 3.1 table. The same amount will be entered here if it is eligible ITC. Then for the inward supplies from ISD, that is input service distributor. If any ITC is there from ISD, then that amount we will enter here. Then finally, last one, all other ITC. The remaining eligible ITC other than above 4, we will fill in all other ITC. Part B is ITC reverse. ITC reverse then is the amount of ITC to be reversed. Is the amount of ITC to be reversed which was already we have considered in previous return as ITC. Then those details need to be filled here. Part 3 C. Net ITC is a difference between ITC available less ITC reversed in this period. Fourth, ineligible ITC. Ineligible ITC is ITC is available but it is ineligible. As per section 17.5 is a blocked credit. These details we will fill here. And any other ineligible ITC is there, then we will fill here. After filling this details, click on confirm. Fourth table. Exempt, nil and non-GST inward supplies. Here we will fill any supplies received from composition scheme, exempted and nil supplies and non-GST supplies. We will fill here. These are all inward supplies which are not liable to take any ITC. These details we will fill here. After filling these details, click on confirm. Last table is the interest and late fee. Here any interest liable to be paid or any late fees are there, then we need to fill here. After filling these details, click on confirm. After filling all these 5 tables, click on the GST preview. It will take 1 minute to save this details. Then click on GST 3B preview drop. Then save it. Here you can see the amounts you have filled in appeared properly or not. Then click on proceed to payment. This is the amount to be paid on outward supplies. If you have any ITC, then you can adjust here. Then the remaining balance to be paid in cash will appear here. This is the amount you need to pay through. Then this is the amount you need to pay through create challan. Here I am entering the ITC available. File. Here final amount I need to pay is 970 rupees. For that I am creating challan. For payment there are 3 options are there. E-payment or the counter number RTGS. I am paying through e-payments. Click on e-payment. Click on generate challan. Then click on select mode of e-payment. Click on net banking. Then it will display the bank. Then it display the bank through which we can pay.
Either with false notice at the
After selecting the bank, click on Make Payment.
Hello. Out of that. Bad. All that. Wally. Boot. Tonight.
वही ट्रांसफर देगा वो वही ट्रांसफर देगा हाँ
Yeah, minute. And well, I'll think about that at that forward look. That. But but it open from yeah the while but I very good but there little up deep part of it or sure up or if I am
after making the payment click on Make Payment or Post Credit to Ledger. Then the liability amount will be offset with credit or cash paid. Then click on Proceed to File. Here you can file through EVC or DSC. Click on Declaration. Then select the signatory details. Then click on DST or file with GST 3B with EVCR, then click file GST 3B with EVCR DSC. If you are filing through EVC, then OTP will send to registered email ID and mobile number.
నీకు ఓటీపీ వస్తుంది పంపుతావా?
Then enter the OTP received through mobile or email. And click on verify. Then it will show the message that is filing successful. That's it. Thank you for watching this video.